Good always, Bizel. So, yeah, man, I appreciate you bringing me in on these calls, man, you know, so we can get some movement going. And
Definitely. Well, man, I know you guys been busy, so kind of tell us a little bit about what you guys got brewing in the private banking space, so the students can definitely kind of get a little bit of kind of an insight, and then we can chop it up from there and see what we can build.
Yeah, well, what we're doing, man, is we're establishing a foundation as far as, you know, like movement, man. You know, as far as the website itself, you know, all of the brothers that's participating with the website, the business services, the trust services, and, you know, last but not least, one of the most overlooked things that, you know, our people, I think, is taken for granted is asset protection, because to build something and then leave it liable to predators is a mistake. And so asset protection is one of the most important things that we should do, you know, as far as, you know, establishing that. You know, we helping brothers get funded. You know, we helping brothers set up these businesses. If they already got businesses set up, we helping them maintain them, keep them continuously going, setting up the trust, acting as trustees, and domestically if they need them to be acted upon. We got offshore connects with the Cook Islands, you know, and that's one of the major jurisdictions that you should be operating in. You know, in other places as well, but for the most part, it's just a basic format that a lot of people can just reach out to if you need some services or you need someone to talk to or someone to help you through the various struggles that you're going through as far as operating your business, your trust endeavors, and you just, you know, and especially, like I said, the asset protection. And so we got this platform set up to help people in that arena. You know, it's everything. You got the whole, you know, everything. So, I mean, I'm just open to questions. I don't know. I haven't been on the show, Bizel, in a minute. You know, I haven't talked to you in a while, but I know how you go. And so I'm just open for the questions if anybody has some.
Definitely. Well, you know, most of the gentlemen, we have new as well as some individuals who've been here for a while that have definitely been put into the mix to do a couple of things. A lot of them are coming to trust for the first time. They're coming up in the ranks as compliance officers. They're studying notarial law. And these things all work in our space. So we're always talking about asset protection. We're always talking about how to operate in trust through trusteeship, suretyship, things of that sort. So these things go hand in hand. And it's always good because a lot of folks say, well, Bizel, well, who do you recommend? And so I usually go to the people who I've built relationships, rapport with, because these are some of the most trusted people that I deal with. So, you know, individuals like yourself, Brother Amir, Kasik, you know, my guy Don, there's a list of you guys that I've met throughout the years who have made a major impact on this thing called platforming and trusteeship. And so what I do is usually refer a lot of these up and coming students, you know, like yourself, into that fold. So they're kind of, you know, we have some that are very experienced, some that have very minimal experience. It's just good to know that they can reach out to someone that, you know, does at least, you know, kind of have, you know, an itinerary, a vision, a platform, willing to work with those that are coming from that same space. You know, the biggest thing I spend my time with during the day is, I ain't going to say correcting records, but I have a lot of individuals who will contract publicly. And when you're dealing with this asymmetric information, you're trying to do something that you definitely are within your right and realm to do. It's not public information. It becomes a component where you're trying to do something, acting in your fiduciary capacity, and then the person on the other end is not that what you're doing is wrong. It's just they're not receptive because it's not public information. So the services that you guys provide, man, I think it's phenomenal, especially in the aspect of, you know, helping them, you know, serve, you know, in that capacity with providing knowledgeable fiduciaries that can assist with that. So with that, I know
one thing I want to state is that we vet these guys, you know, because you can get any trustees, and, you know, a lot of people say that they do this and do that, but these are trustees that we done vetted, and they have a common you know, thought point that we make sure that they do exactly what we want them to do in regards to the people that we bring on. You know, it's not like these just, you know, they just are institutional trustees or trustees that just, you know, operating from a standpoint of, well, you know, these is guys that's been hand selected. So we got some good guys on that. And like I said again, you know, as far as like this holding your hand, man, you know, everybody need that. So we and I don't want to go into too much in depth, you know, with this stuff because this probably not the space right here because I know you got a show to do and I don't want to take up a lot of your time. You know,
right.
I'm appreciative of you bringing me on the show and, you know, introducing me, giving me the accolades that you gave me. I appreciate that. You know, to be amongst one of your, you know, guys that you selected. So, yeah, I just wanted to introduce myself, let everybody know, you know, who I am. My name is Farrar. I've been dealing with Bizzell for a long time. Y'all guys is in good company. That's for sure. And so,
I appreciate
the guy's a wizard.
Definitely.
Yeah, the guy wizard.
Well, I definitely got a couple of them that's definitely rearing to throw some questions your way. So I'm going to make it all relevant and tie it in if you just stick around for a second if you can.
No, not a problem. I'm here.
Okay. Definitely. Because, see, guys, this is kind of go back to the lessons that we've been building up towards. In the first initial trust syntax mastery class, I've been driving home the point of understanding commerce, especially from an accounting perspective. Because when you have that basic knowledge, you can take the present construct as is. And if you understand the rules, you can take advantage of it. You can leverage that information. But I want to keep the conversation in the aspect of, okay, what we call private information, we'll call it asymmetrical. And what you will call public information, we're going to call it symmetric information. That way everybody can say what they need to say without it being a matter of semantics. Like, for example, when you study the fundamentals of trusteeship, you learn there's a universal language that deals with, just like my brother Faraj just said, asset protection, asset management. You learn how to deal with assets under management. You learn there's protocols in different jurisdictions. That's like across the board. Then what you realize is that in the public space, which we're going to call symmetric information, everybody who knows this information, they have to keep it in a certain space. Now, again, if you're willing to apply yourself, make yourself applicable, abide by those jurisdictions, then you can take advantage of what's there. But there's also another rule. If you're not willing to be fully liable. See, individuals in the public, they are accustomed to dealing with limited liability. They are accustomed to not being fully responsible financially for a lot of the things that they do. So this kind of boggles the mind. They think, and this is no draw on anyone's level. Look, I was thinking the same way. Look, I went to school, I went to college, I got the degrees, all that other stuff. I showed up on time, did what I was told, only to learn that what I was taught, it was way more than what they was teaching. It was a whole different angle to that. So symmetrically, we're all taught to embrace commerce a certain type way. When you learn new information, now you're like, okay, well, if this is really how it works, now the system makes sense. We can't have creditors without debtors. So it's a yin and a yang. So am I going to stand in the middle and become the ability, be able to balance both sides of the book, or am I going to pick a creditor side, or am I going to just forever be a debtor? And this is something that you internally determine. And it's not necessarily what you say, it's through your actions. How you move in commerce, how you move through these jurisdictions. That's why they have rules. They deduce these rules to codes. And these codes, I mean, brother, you can let me know if I'm kind of off base, but
no, you're absolutely correct. If you don't mind me saying, in the public arena, they have certain rules and obligations that they have to apply to themselves. Whereas in the private space, we don't have those same rules. And I'll take just take for instance, let's just use asset protection, for instance, as far as the a legal claim being brought against, let's just say, any one of us. Right. And that legal claim, a judge issues a order, whereas they say that these assets have to be disclosed, right? So that's what the judge says, and most people who operate in the public arena, they're going to get scared and they're going to say, okay, well, they got to disclose their assets. Well, your assets about to be gone now because they've attached a court order against it and a claim of action. So you can't even use asset protection now because that's technically against the law if you public, but if you private, you can do it. That's a whole other story. But so when you're dealing in the private and you have private trustees, private whatever, these orders have no force in effect because you're not in that space, and you don't have to follow those. And in the Cook Islands, they definitely don't have to follow them. So the trustee will just simply stand up and say, well, you are ordering these beneficiaries or these grantors or whatever to disclose assets. Well, y'all don't have the jurisdiction to do that, and we don't have to disclose them, and they don't. And so those creditors, they move away. And so that's just one aspect of it. It's just so many different ways.
There's so many examples of that. Like, and not getting to specifics, but I do a lot of arbitration, and I hear a lot of cases, and I literally, I think I have I have my finger on somewhat of a small pulse of what happens in these type of conveyances. Give you a perfect point. Right now, most of the conveyances that are being done through what you would call court orders, they technically take, because they have to tell you what they're going to do to you before they do it. So when they make statements, and I'm choosing my words carefully because I want to make sure everybody gets this. When any public official articulates or make a statement commercially, they're not allowed to make such a statement unless that statement is backed by some type of bond and insurance. They can't make in court orders unbonded rulings. Now, when you don't understand the language, for example, if you're under the impression that when you go to a public tribunal, that just because they made you put your hand on the Bible and give sworn testimony, that everybody that's going to make statements, they're going to do the same. That's one of the biggest things that a lot of our people fall pitfall to. Because, see, keep in mind, before you even put your hand on the Bible, they'll give you some sort of public charge. Notice I said that, public charge. When you finally do go to
bill.
Right. And when you do go to court, you're thinking, I'm going to court. But you're actually going to your first appeal. They've already had court. They had court on the side of the road. They had court when they put the bracelets on you. They had court then. They was judge, jury, and executioner at that point. Now, so you're showing up to court thinking it's, your first court appearance and it's your first appeal. Now, we get into you've been charged. Now that you've been charged, they're asking you, they're articulating, they're making bonded statements. Remember, you had to make bond just to get out to even speak to these fools. So now you're articulating with a magistrate. It's really banking and accounting, but you're thinking it's court. They tell you in the rules now, anything you say, we're going to do what? Hold, we can, and will. So it's not like we can and maybe. We're telling you that whatever fly out your mouth, we're going to use it against you. Now, you go through that whole seance. Then, after they decide whether they have jurisdiction or not, which usually we give into that because creditors are never going in arguing. Creditors are responding to questions with questions. So he who's asking the questions typically is the one who's the creditor. The person who's making all these statements saying the dope ain't mine, this, that, and the other, we already know how that's going to go. They already know how that's going to go. They got to get you to understand that he who consents can receive no injury. As long as you keep consenting, even though you'll call it illegal, illegal simply means it's non-taxable. Legal simply means in commerce it's taxable. And what you'll call fraud is only a failure to disclose. See, they have rules on how to not disclose. That's why we're talking about trust and asset protection. There's rules for every player on the board. But again, if you don't know that's what you're doing and you're in court making statements, trying to prove something, you understand how that outcome goes. And again, you can have Johnny Cochran or you can have the public pretender. It doesn't matter when you don't understand that it's banking and accounting and you're going in there being that I'm going to do my job as a righteous man and tell the truth, the whole truth, and nothing but the truth. And you're thinking that they can't lie when lying is perfectly legal. Perjury is what gets you in trouble. They are not going to perjure themselves because they're telling you, if you come in here making unbonded statements, the facts are on the moon. And that, when I listen to cases like this, I spend a tremendous amount of time trying to get past who shot John to, okay, there's commercial energy here, who was damaged, who needs to be paid, and how do we bring integrity back to the estate. And this is just not for the creditor. This is for the debtor. These are all participants that are involved in commerce. The biggest thing is CFR 2711, which I've when I was working with you guys early on, this was the campaign I was on at that point. And with the new students, we just took a new way of explaining it. There's a reason why
commercial. That's what you
right. This is why literally you got to understand these individuals that call themselves public officials got to be bonded and insured to even do business with you. But if you don't ask them for their bond information up front, you have left yourself wide open to persecution. So what you explaining, having competent fiduciaries to handle commercial matters in a lot of different instances makes a lot of sense, and it appeals to a lot of people. Just in, and I don't want to get into too much of the private stuff. Whatever you can talk about, is definitely going to help us all out in that regard of articulation. In dealing with the banking space, like, I know you can't go into too much detail, but someone comes along with portable land like gold and silver, and then they're interested in using that value commercially. How could you kind of articulate that? What does that look like to someone like you?
Well, first of all, I wouldn't do it on the public side. I would do it on the private side. You got cryptocurrency. You got various other platforms that you can utilize for that. And again, we can't do it on this. This is a private measure. That's something we need to talk about. But there's a number of ways that you can go about utilizing that and making that work for yourself.
Right. So
you can make it work for yourself because it's the mediums of exchange are regulated as well too. So
right,
you gotta know that.
Like, there's a lot of people who and we've been talking about this stuff for years, but it's new to a lot of people. So what we've
so what form of currency are you using? And,
there you go.
You got to know. And if you signed up for these particular platforms, that you use your Social Security, what did you use in order to sign up for this stuff?
Exactly.
You signed up for it, so now you got problems, and not problems, but you got to obey.
Right.
In order for you to put the application in, guess what it says at the bottom? Submit.
Exactly. You have to comply. That's consent. That whole aspect of consent is one of those things where he who consent can expect no injury. So if you consent and then it tells you, now when you submit this, we're going to bop you over the head. So when you get bopped over the head, you can't go running saying he hit me. It's like, well, that's what you signed up for. You signed up to be hit over the head.
And they give you all the applications before you submit it. They say, read this, read that. We don't read it. And so you submit it. And so now you're, if you get in bed with us, all of these rules, regulations, ordinances, everything that's applicable to us is now applicable to you.
Right. And that's why it's impactful to know that, okay, the reason for insurance, and I'm going to talk about insurance and reinsurance, and then I'm going to open up the floor for questions. I want every compliance officer who's listening to this dialogue to keep in mind there is a reason why public officials are required to be bonded and insured. Now, just like there's a reason why if you go get out there on the freeway and you're operating in a certain type of conveyance and jurisdiction, you might, quote unquote, own the car. This is my car, this, that, and the other. But again, if you got to get a tag, registration, and insurance, you're there. Look, you got a license to operate that vehicle at 55 miles an hour. I have to explain it this way to some people. Like, okay, your license doesn't let you drive 100 miles an hour on, safely and soundly on an area that's going 75. You don't have a license to do that. You have a license to operate that vehicle safely and soundly up to the speed limit. So when we don't read the details and we get caught up in the rapture, so to speak, a lot of us, and I've been guilty of this too, we get real emotional. So we are emotionally correct, commercially wrong. And the only thing UCC does when you are emotionally correct, commercially wrong, is stand back and watch you go down in flames, because they're going to say, okay, at the end of the day, let me just make sure you understand this. You do know the only reason why they're doing what they're doing is because you consented to doing it. And, now that the contract done went left, you want out. And the whole reason, and this is another kicker. People in the public, when something go wrong, they immediately want to go to court. When you understand that's a catch-22, that's why they got us coming and going. What you just heard at the beginning of the class when I played the legal maxims, one of the legal maxims states that it is tax fraud to go to court to settle a matter that can easily be settled outside of court. Like, if your first reaction is, he did me wrong, I'm going to court. They know they got you coming and going. Because there's arbitration clauses in contracts. 99% of who shot John and it went going left, somebody somewhere had insurance and somebody else had reinsurance. You just didn't ask the questions. You have an arbitration clause that if a dispute arises, it can be settled civilly, like gentlemen, outside of the public tribunal. Now, when you go to court, you're committing tax fraud, but because you're going to get a benefit, they'll go that consent again. And these judges and magi's, they sit back and they listen to what you say. They weigh it by what you do. And their job is to see, do you really believe what you're saying, or you just repeating what Bazell told you or somebody else told you? Because if you really believe it, then your actions are going to dictate this. See, I don't need to have a whole bunch of UCCs to know that I'm a secured party. I'm going to act a certain type of way. If they are bonded and insured, they can accept the K-1 disbursement to settle the matter. That's the whole purpose of having. So it's like there's always a remedy when you are in your fundamentals. So this is why these are exciting times for all of us being here, because as compliance officers, these recent bank failures have increased our revenue by 300%. And, that's why we got you here to kind of tell us where to take this commercial energy to in that regard.
Man, you know it. You know it better than me. So hey, I'm just here, and I'm glad you brought me on. Because in the public, them guys got too much. They got the liability protection, risk mitigation. They protect themselves from the public.
Exactly. The insurance is the protection from, and I'm glad you said that, because the whole if they got to be bonded and insured to talk to you, doesn't it make sense that you need to be bonded and insured to talk to them? And it really,
exactly.
it doesn't make sense. It's like, okay, they got bonds and insurances. That's why they're doing what they're doing. You know, it's sort of kind of like it's like if in America, quote unquote, everything that you deem as illegal, you can get a license to do. This is why the penalties are so severe when you're out there doing unlicensed commercial sanctions and transactions, especially if you're
And got in bed with them, and you got in bed with them.
Right. You got in bed with them using their stuff. Now you want to grow a brain and want to renege. They're supposed to slap you on the head. It's too late.
Right.
They got to deal with you. They have to. They're mandated to deal with you because you're belligerent.
Yep. You got on the public side with us, and you didn't know how to operate from the public and the private, because the public is not all bad.
No, it's not. That's what I said. We can have a totally different conversation, which, you know, also just kind of let you know a lot of these guys, especially the new guys, most of them aren't just notaries. They are compliance officers that actually have a license to sell money. They're brokers. They actually work for two large reputable lenders in the United States. I kind of made that mandatory because we can get into certain type of conversations publicly.
Right.
If you have a contract with a brokerage that solicits and sells money in the form of loans, now through arbitration, we can talk about what the private is providing in order for the public to benefit. Because, see, the private technically provides a benefit for the public.
It provides the money. It provides the energy.
There you go. There you go. Like, you really get into the weeds of this. Well, you can't really call yourself a creditor unless you're providing a consumer good. That's the other three-pronged test. Like, I've arbitrated cases over the last few years where that has been demonstrated. Like, I've had fiduciaries come back and say, okay, well, since you're stating, they use that word stating, can't make unbonded statements. Since you're stating, because they know you're bonded, that you are a creditor, what are the consumer goods that you provide? And if you can't respond quickly, effectively, with substance, they got you dead to the right. Because, see, you can't be both. It can't be both ways. You know, I think the hardest lesson I learned was that in order for me to have true remedy as far as when it comes to discharging debt and this, that, and the others, I had to first get out of my own feelings and forgive them for trespassing against me. I had to forgive debt in order to start discharging debt. I can't discharge debt if I ain't forgave debt. And that's real tough. That's real tough when you don't understand how accounting works. Right. It's just like as a lender, if I lend a borrower money and he's on a 5-year note and I have an arbitration clause inside of the contract, and let's say he makes 90 days of payments, and then, you know, I know his job kind of wobbly. You know, he's got family issues going on. Now, his paper ain't went totally bad, but he's hanging on for dear life. I can make an executive decision as the lender to contact that borrower while he's in still good standings, but he's holding on. Say, look, I know you're having problems. And when you're having problems, I'm having problems because that's going to jeopardize the paper that's backing this loan. Here's what I'm going to do. This loan, I know I financed it for 6 years. What I would like to do is I would like to file a creditor's return on your behalf as you being the debtor. This does two things. This allows me to file a return. Listen to this real carefully. The lender gets to file a tax return on behalf of the borrower, the debtor, meaning that the creditor is doing the tax return only because there's an outstanding debt that he has with this person that's in good standings, and he wants to accelerate it. Now, the tax return is done in such a way where I don't receive my fiat, I receive a tax credit that works in the same capacity as fiat. Now I'm happy. Your loan is done away with, and now we can move on to another loan to expand your business. Now listen to me real carefully. These were things that has been done and are still being done in a lot of instances, but that doesn't get public airplay. They're not talking about that. They will allude to the scary line of insurance, reinsurance. If you want to get this deal done, first thing I'm going to ask you is, can it be insured? And then after we insure it, can it be reinsured? If you can pass that two-prong test, we can fund this all day. If we can't do that, then we need to develop a way to do that. So it's not that it can't be done, it's rather what the time and energy of doing. You're going to have a third party, an uninterested third party who has nothing to gain by saying that you are who you say you are.
Mm-hmm.
And that's the key. But definitely, brother, man, look, I think I got some questions.
No, bro. I didn't know you got explosives, man. Very.
Look, man, hey, this is how it goes, Bray. But man, I think I got some guys that may have some questions. So what I'm gonna do for everybody who's definitely listening in, feel free if you got any question to press 9-4 on your keypad. Press 9-4 on your keypad. I'll definitely bring you on, let you bring your questions forward. I got a lot of things we can definitely get into. I do have, like I said, my special guest, Brother Farad, who definitely comes from a long list of individuals who not only talk about it, they live it. They are practicing this on a daily basis. I want you to understand that, and I know a lot of you guys, well, this conversation might be a little bit over my head. Don't feel intimidated. What I'm gonna say is this. This is being recorded, and you'll have it in your portal. So I want you to listen to this conversation a couple of times. And, even though tomorrow is Jumar and Talim, we are open for business for those that need assistance, especially with the securitization audits. We are using arbitration to do those things. And because we're using the AI technology, this stuff is automated. So I want you to really think about the parameters. And maybe this will kind of help get more questions, get some more hands raised. We go back to yesterday's lesson. In commerce, associate the word fraud with failure to disclose that produce an ill-gotten gain. Associate that word because it's a double-edged sword and it works both ways. Those that are in the private, and again, I dwell among some of them. They have no problem with speaking that. Well, fraud is we can legitimize fraud through the UCC, and I know what they mean when they say that, and they're definitely right. But just keep that in mind. Just keep that in mind. Oh, I got a question for you, big bro. So hold on. I think I got one of my students that may have a question or two. Big brother, can you hear me, man? I think you got your hand raised, man.
I'm right here.
All right. Talk to me, big bro. Talk to me.
Oh, I didn't mean. Forgive me, beloved. I had said that I'm in the dealership.
Oh, you in there making a purchase, man?
I'm making money. Every time I spend $1, I turn it into $3.
There you go. I'm with you, big bro.
I'm gonna be sitting right out there. I gotta take a phone call. All right, my man.
Yeah.
Gotcha, big bro. You still with me? You want me to put you? You want me to skip around?
No, I'm here.
Okay, still here?
Oh, you
I'm gonna be sitting right there taking a phone call. All right, I'm clear. Forgive me.
Okay, you clear? Talk to me, man. You got your hand raised. You got something popping over there. What you got going on, man?
I just wanted to get into the party. I'm over here, spider senses tingling. I'm like, you having all this fun without me?
Man, look, now, bro, look, we inviting everybody to the party, man, because it's one big party.
Ain't no fun when the rapper got the gun.
Never. It's never no fun when they ain't got the gun, man. Like in the aspect of just, this is awesome. I got both you and Farad on, man. This is how the universe works. From your experience in banking to being able to get ready for true asset protection, what do you recommend?
You talking about me? You talking to me or brother?
I'm gonna let him go first, and I'm gonna let you add to it.
Okay. Go ahead.
Forget everything you learned, because you learned half of it. You learned half of it, and the half you learned, it was backwards.
Wow.
You got to reset, start fresh.
Reset, start fresh. What would you say to that, Farad? Like, how would you tell, a person who's coming into this knowledge, they want to get into asset protection, where to start? What would you tell them?
Well, exactly what he just said, as far as like, kind of forget, don't get so caught up in this is for rich folks and this, and I don't need to protect my assets, because when you're talking about asset protection, you're talking about estate, you're talking about legacy, you're talking about a lot of stuff. So you just got to look at it from the standpoint of your livelihood, just protecting family. It's a protection moving forward and passing wealth, passing whatever wealth that is. And it could be as little as $10,000. You're passing it. You got to think like that. If you built it, you protect it.
Well, this is why I said they have to leave everything at the door, come into the house butt-ass naked, take a shower, and then realize that there's some Gucci shoes and a Gucci belt, a Gucci robe. Get in there and play the part.
Right. It makes sense. It makes so much sense. See, and just to add to what you guys are saying, asset protection, you're the first asset. Your legacy, your livelihood, your bloodline is just as important as a Rockefeller or a Bilderberger. You have the same potential. So if they are operating in the most protected vehicle commercially, they're operating through trust, they're leveraging insurances, this is available to you as well. You just got to understand there was always an alternative. It just wasn't, quote unquote, at one particular point fashionable, or I just put it in the spiritual realm. It wasn't your time to know it at that point. If you're in this class now and you're listening to what we're talking about, it's your time. It's not about everybody doing what you're doing, because this ain't for everybody. I have individuals that I will say, without kicking nobody under the bus, you can only lead a horse to water. You can't make them drink it, and you can't want it more than they want it. Like, I deal with some people sometimes who it's like, look, if you're not willing to invest in your private education to save you and your family, then I'm just going to shake off my sandals and keep it pushing. My job is to simply give you the information and let you make an executive decision on what you're finna do from that standpoint. But I can't want it more than you.
Well, that's because they don't understand their value, beloved. They don't understand they're a walking, breathing bond that is backed by their general intangible asset that we call intangibles.
And it's intangibles. And that key word, that's why you do that two-pronged test, because if you're dealing with tangibles can be insured. You have to know that it's to move through this veil of commerce. Keep it simple by looking at whatever you're doing. Can it be insured? And after I start doing it, can it be reinsured? If those two things are accomplished and are doable, I'm 99% there. The other 1% is paperwork.
Well, hey, think about this. Once they realize that they the GDP,
okay,
and that they're the commodity that the public officials is talking about when they speak about the debt and the national debt, then maybe it'll be more of an interest about, let me take control of that particular parcel
of the
GDP.
Right, you're so right, because when they say GDP, for the unlearned, it's a turn off. To individuals in the private, it's like you perking up, because that's what they talking about something. They talking about you.
Yeah, the GDP, the gross domestic product. What is that?
That's you. You're the gross domestic product. There you go. They have a vested interest in that, and you should have a vested interest as well. It makes sense.
Exactly. On the private side, from your portion, because everybody ain't going to be able to, like you said, but yeah, just from your portion.
Right.
Of that gross domestic product, which is your estate.
There you go. That's key. I'm telling you guys, you're going to want to listen to this a couple of times, because I know, as things get into rotation and they become repetitive, it'll stick with you. man, I appreciate you guys definitely dropping this, man. I know. Let's see. I got another brother on here. I'm trying to see. I want to pull his coattail. I know he's in the middle of a transaction. I'm gonna put him on the spot though, because he may have some questions for you. He was asking when you guys are gonna be coming on. So let me see if I can bring him on right quick. Brother Jobbers, you there, man?
Hey, Brother Bizel.
Hey, man. Hey, I got Brother Kasik. I got Brother Farad. I told you I'd bring in the dream team with you today, man. I didn't know we are going to have, everybody showing up. But, hey, nonetheless, hey, so, I mean, I know we talked in the interim about certain questions. So now that we got these guys kind of nailed down, if you got a question, drop it, and we'll chop it up and see if we can work out something, man. Like, now that you got them, what do you want to ask?
Well, my question is really on the audit process when we're securitizing when we're securitizing like mortgage-backed security.
Right.
So if we're auditing, like my whole thing is learning the process of it, because I'm coming into the trustee venue new, and I'm trying to learn it and actually do it at the same time. So,
okay. I'll pick the lead up from that question, and then I let my guys definitely chomp away at it. All right. To learn it is through implementation. So as a civil law notary, a compliance officer, I'm going to give you two ways to look at all mortgages. We're going to talk about a mortgage that somebody else has on the property that you're going to, quote unquote, create a new mortgage. So that way you understand how it's being implemented. There is a pool of assets that we're going to call mortgage-backed securities. Now, these were loans that was done before your paper came into existence. Inside of that pool, there is verbiage on the prospectuses that lets you leverage the overages, because in trusteeship, trusts are not technically supposed to have overages on their balance sheets. That's why their prospectuses are written with principal investment amount. And if you just simply, like if you add up all the CUSIPs on the prospectus, add them up, and then subtract it. You notice how I said that. Add up all the CUSIP values and subtract that from the principal amount. That's the overage. So when you read a prospectus, you're adding up the CUSIPs, subtracting that value from the principal. So now this is the value that we're talking about. Now that value, you're going to call it a general intangible receivable, or you're going to call it a general intangible payable. It's based upon which direction you are as a fiduciary in the aspect of conveyance, meaning that some guys have trusts that are set up to receive these K1 disbursements. Some individuals have their trust set up where they disperse. So it depends upon your trust res and how that is set up, which direction you're going. So the implementation is when you are looking at a parcel and you are going to be able to utilize an outside lending source to bring or create, we're going to call it what it is, create new commercial paper off of the old commercial paper, you are in the 80 to 90% proponent. Now, I'm going to bring your question all the way out the other end. Once you identify that this property can meet lending requirements, and again, because you're one of the ones that's in our in the new Banking in the Box platform with your M3 asset, I'm gonna onboard you into a working model with the platform, which means you're gonna see how the M3 asset is created from the mortgage-backed securities. It almost is like if you've probably never done loans before, but every loan officer today versus what it used to be before the computers and everything else, because I'm kind of old school. I remember back in the day when they had Calyx. I used to do loans with Calyx. We didn't have internet like we had now. I had to call up the person. They keep you on the phone for 2 days. When my loan gonna close? When my loan gonna close? And you're going back and forth with the underwriter. Now you have what they call automated underwriting software, and the software
They're
is
spoiled. They're spoiled. That's why they're so stupid.
right. Exactly. So they don't. So if you are around, like I hate this. My grandkids tease me. That's like when they call me old school or they call me OG. I'm looking around the room like, damn, they talk about me. I guess I am the OG now. If you've been around and you're an OG in it, you know that okay, this mortgage, this automated underwriting software is wired to fund. So it's gonna tell you, like, okay, you need to provide 5 things. If you provide these 5 things, loan is approved. If you don't provide those 5 things, the loan is tentatively approved. Now listen to this. The reason why it's the tentative and this, that, and the other is because they got this whole pool of mortgages happening in the background, and they can't have overages. So it's musical chairs. They're playing musical chairs with all these old loans. You come along with your new loan, it gets thrown into the mix. But guess what? Everybody who doesn't substantiate, somebody is not going to have a chair to sit in. And they got a whole automated system on. You come in with new paper, somebody who ain't performing, roll out. There is an incentive. Listen to this now. There is an incentive for these properties to foreclose because the damn title insurance that you got and I'm in arbitration with these cases as we speak, and I'm going to show this to you, Jarvis, when we get into that platform.
Okay.
Inside of the title insurance, if that person loses their job, if they become financially incapacitated, if they face a financial hardship, we're going to use the word financially incapacitated because that leads into how these conveyances kick in. Once, I'm going to say it in plain English, once you make a claim on a title insurance, that insurance is designed to keep the payment going when you can't. But guess what happens? They want to accelerate the mortgage because the paper's going to lose its credit rating. So there's this extra money that can only be used by everybody who's doing what? Accounting. So you come along with a new loan, new paper, insurance, reinsurance. So it's a balancing act. All you're doing is you're looking at the property to see if it meets the loan requirements for you to replace the old paper with new paper. Now, between me, Cacique, and Brother Farrar, we can probably spend the next 3 hours explaining how intensive that could be in a lot of different ways. But that's how you observe, match, and implement the process. Now, I'll start with you, Brother Cacique, and I'll let Brother Farrar finish up. From that perspective, what would you further recommend once they have identified the MBS that they want to use for leverage? Now, keep in mind what I just said, because they're going through everything that we just described. They're just at the part now with implementation. What would you suggest they do at that particular point?
Forensic accounting to backtrace the transactions so you know which chair to sit in.
Beautiful.
Mm-hmm.
Beautiful. What would you say, Brother Farrar?
Same thing, remember when we were dealing with Barbara and Linda, remember?
Right.
Out of Florida. You remember how we yeah, the same thing. We got all of the forensic information that we needed, right, from those that were behind the scenes as much as we could figure out who was behind the scenes. And then right, we modified and we did new promissory notes, new loan agreement, everything. We modified it. And those people had success. But you have right, to understand the process.
Exactly. So Brother Jarvis, it's a matter of implementation. See, when you understand it's always in your eyes. Your question is, when I get ready to make this purchase happen, can this purchase be insured? Yes. And once it's insured, can I get it reinsured? Yes. Now it's just a matter of, just like the fellas and myself are saying, it's about critiquing the contracts and understanding the rules and jurisdictions. Did that make sense to you, brother?
I mean, you wrapped it up in a nutshell.
All right. Any other questions for my guests, man? Any other questions for anyone that definitely is in? You got any questions for us, Jarvis?
Okay, so when we're administrating this type of process, okay, so in third person, the trustee must go into the value of the equity that's been already secured on the securities that we're tracing in the DTC. So once we gather the net value, we basically subtract.
Okay, I see what you're trying to articulate. Let me help you out. If you want to know what to do and you unclear, there's a cheat sheet. See, everybody in the public, you're going to do exactly what they're doing in the public. You're just going to do it in a private capacity. Let me give you an example. The public, when they want to raise capital, they create an entity. They resort to selling shares of that entity. We'll call it equity. That equity is booked. The business balance sheet increases. That business, through an increased balance sheet, can go into what they call a LBO, which is a leverage buyout. That means they can absorb things on their books that's beneficial and get rid of things that's not beneficial by bringing someone else that's in a better position or different jurisdiction. So it's the valuation of what you have, net asset value, and then utilizing LBO. Two acronyms, NAV, LBO. Once you do those two things, now there's over 20 different products besides cash that you can legally use to convey value from one ledger to the other. But those 20 plus different ways depends upon who you are in the transaction. My training
I was
for
about
you,
to say, we in deep waters here. We're in my home.
Right.
I feel so.
Right, because that's the whole point. That's the whole point. Like literally, what we want all compliance officers to be upfront with and understanding what you're doing is, when I determine net asset value, that could be placed on the book. That can either be placed on the book as a debit or a credit. Who determines that? There's only one public official that I know of, arm's distance dealing, that gets the right to determine what an M3 asset is or what an M3 asset isn't. And they are a notary. But that notary, the notary has to understand the insurances and reinsurances to recommend out of these 20 plus different types of negotiable instruments, which one is most feasible. For conversation purposes, I'm going to say it at least needs to be some sort of bill of exchange, only because of the demographics of where you're coming from. I'll go public. It don't have to be a bill of exchange. It just needs to be regulated under Regulation J and Regulation Z, and it also has to have an arbitration clause so it can be conveyed. See, if you can convey an instrument that's under Regulation Z and Regulation J, the court can do it for you. That's what they're there for. And the court ain't going to cut no check to an uneducated, incompetent fiduciary. The court going to hand them a K-1 and say, keep it pushing. Because that's all you can do. So don't reinvent the wheel. If you can't hand your M3 asset to that person who is demanding you hand them fiat, you ask them. This is another reason why you ask attorneys. You ask these jokers. Show me. If you want me to wire money to your account, I will send you that and 10% if you can show me the last 90-day CTRs. And when they fumble and tremble, now you gotta rock my way, because now you're incompetent. I gotta put a lien on you, and I can't put this private energy back in the coffer. See, whatever's private stays private, but the minute I pull it into the public, I can't put it back. And you just damaged me in my commercial affair with your incompetency. So I got to get your bond and insurance. And since you didn't provide it, I got a right to put a lien on you and force you into involuntary bankruptcy. This is why it's imperative that you understand they have to be bonded and insured to even deal with you. technically they got to be bodily insured to trample over you. Either way, one can make a claim, and failure to do so is no excuse. So when you're looking at your transactions, determine NAV, determine LBO, then it's just a matter of you provide that transmittal letter, you provide your UCCs with all the instructions. You're going to do a UCC1, a UCC3, and a UCC5, because once you get to the 5, you can start authoring letters of credit. And anyone who's got a DTC or a Euroclear terminal, they can move that energy from one ledger to the other. We ain't even got into smart contracts, but my brother Farag and both Kasik can school you on how to do it through smart contracts once you get it to a certain format. So it's not hard. You just have to understand where you want to go with it. Guys, did I leave anything out?
No, I think I'm ready for the next question. The next question I have is on the back end with the securities when we're actually doing a private exchange with the buyer.
Okay. So, all right. So we're doing the private exchange. Are we talking about portable land?
No, we're talking about security.
Okay. Okay, I got you. All right. So on the now I see where you're going with this. Okay. So, all right, I'm gonna leave certain things out because the private exchange can toggle into solicitation. Here's how I'm going to say this. When you're talking about private exchanges, as long as you have substantiated the method of exchange and the medium of exchange, just like a trust, whatever those rules are, any individual or entity that is coming, to participate in this exchange, that'll determine the groundwork. Now, we get off into specifics like, well, what is my rate of return? That's a solicitation contract. Oh, that's really a solicitation question. We can talk about it off air. But the exchange can be, okay, I'm going to bring equity out of my home. Another person can say, well, I got gold and silver. I'm going to use gold and silver just so for the listeners who will hear this later on, as long as that value can be placed on some sort of safekeeping receipt and placed in custodialship, there's a way for that value to be conveyed. When you want to know specifics on programs and the rate of return, I do have a new list of programs. I just said that for the recording and for anyone who's listening. If you want to know specifics on the rate of returns, bring that up at the class, and then I will go into what was just given to me. If I had a certain QSIP, I can give you more detail. If I had a certain type of security, I can give you more detail. If we're just talking generally, if mortgage-backed securities yield 3 to 5 times the value, meaning that if you pay $1,000, you're getting back 4 to 5, let that be like a foundation for the exchange. So if they bring in $10,000 in equity, you probably can get $50,000 in a general intangible payable. That makes sense to you?
Perfect.
Okay. Guys, am I doing a good job? Y'all want to add into it?
Man,
Bizzell,
you taught me in the mirror, man, this stuff. And so I ain't got nothing to say about that on the accounting. No, you taught us. So I have nothing to say. I'm listening. I'm a student right now.
Okay, I'm just trying to make sure I'm telling the brother right. That's all, man. I want to make sure I'm telling him right.
Mm-hmm. I know what I know, but I don't get involved with what I don't know. You the man with that.
I got you. Well, brother, hey, any other questions for me, Jarvis? While you got me in the hot seat, man.
That's it. I'll be back in 1 second.
All right, that's what's up. While everybody's listening, do we have any other students that's out there in the audience that have any questions? If so, please press 9-4 on your keypad. We can definitely get it in. I want you guys to keep in mind that the data sets and the ability to use the AI is way more an advantage than you realize. I'm just telling you, I totally forgot today. My provider for my underwriting software, it matured today. So, case in point, we're going over the monetization of the arbitration cases that are in play, and we're talking about doing loans and this, that, and the other. And it dawned on me that the entire software is API driven. Now, this is before we came into class. So I'm sitting there, and I was like, well, all right, I wonder if there's some sort of interface that I can, because see, me having my vision impaired like I have, I talk way faster than I type and I think. So I like it, like how a lot of you guys use Siri and Alexa. That's how I interact with ChatGPT. I talk to it. I tell it to give me a scenario, a workable outline. I add all of the legal cases, and I speak it into existence. And what it does, it duplicates the outline in seconds. Now, with the underwriting software, you just got to tell the AI what the parameters are, and it'll take the data and conform it for acceptance. Now, this is what I was doing before class. I was literally moving all of the values off of everyone that has an LEI into a bankable security. And these are real-time transactions. Like, once it's done, it conveys over into another sandbox. It is instantly transferable and bankable. So, if you know and you have a certain data set, you could technically, and this is what I'm saying, and again, before I begin, let me put the disclaimer out here for the recording. Each and everything we're saying in this particular class for educational purposes only. We do not profess to give legal advice. Each and everything that you're listening to is for educational purposes only. If you hear anything within this particular session that sparks you to do something commercially, and you feel that you need to recruit, hire, or bring forth someone that represents the legal profession, please do so, because here in this particular training space, we profess to give only educational information only. Now that I put the disclaimer out there, the entire algorithm is dealing with asymmetric information about M3 conveyances. They reinsure M2s and M1s. I'm going to say this slowly. You bring an M3 that can be insured, and the technology has the ability to automate and reinsure that M3 into an M2 and M1 format. You're training your AI to convey M3s to M2s and M1s, but you got to feed it data. You got to tell it, well, who is going to receive the M2? And then it's going to start asking you questions. Do you want to give it directly to the fiduciary, or do you want to use the court-registered investment system? Because you train the AI on what's the default. The default is if you don't find anyone, take it to the court. So it's going to, when you go through these processes, it's literally going to give you step 1, step 2, step 3, so forth and so on. So having your materials, your study materials, having your information. Again, I'm telling you now, this class that we're talking on right now, once it's recorded, it's going to be transcribed. The AI is going to totally repetition it into a whole brand new lesson. It's going to teach it 10 more times. This is how I'm using the technology. So it's designed, it's a language model. Everything that we've been talking about for these last couple of hours is all based in a language model. We just have to be talking about commerce and M3 assets and trust and so forth, but it's a language. In law, you have a language that they call legalese. And it's really the codified. They use an uncomprehensive language to layman's. That's where the protection is and how they convey the information. They know you won't read it and it sounds too complex, so you just trust it. It's really simple. It's math. And there's rules when it comes to that. So I am really making it mandatory that when we interact inside of the arbitric space, I always keep my AI handy because I'm ready to disperse. I'm ready to convey. And I'm looking for cases where the conveyances can take place. So my AI has been trained to take what you're talking about and create a scenario where it can be bankable and insured. I hope this information is motivating a lot of folks in that capacity. Brother Farad, before we jump out of here, man, give everybody your contact information so they know how to get at you, man.
Okay, well, it's called the Private Bankers Coalition, spelled just like it is, Private Bankers Coalition. It's a lot of information there, you know. And as far as the phone number, it's right there on the website. Anybody want to contact me direct or, you know, contact Bizel first, and then he'll contact me however you want to do it. But, yes, the website is www.privatebankerscoalition.com. And,
right.
Yeah.
Definitely that, big bro. Hey, I'm telling you, man, look, this is, I got quite a few, you know, like you got Brother Jarvis, I got quite a few other folks, some new ones that are in, some that already have platforms, they just need a place to bring it. So, man, this ain't the end, this is only the beginning. I'm going to be bringing these folks over to you. I had a question that was indirect someone wanted me to ask. If someone wanted to leverage insurance, do you have a proponent inside of the coalition that can assist with that if they got insurances that they want to leverage?
Yeah, Amir, of course. You know, Amir, that's what he's doing now.
Gotcha.
Beautiful. Get into that. Yeah, he's doing that right now. Yep, absolutely. Captive insurance.
Right. Mm-hmm. Okay, good deal. Shoot, with that, man, we finna get it in then, bro. Look, we still got a little daylight on this end, so I'm gonna try to see if we can get some more stuff pressed. Start sending some stuff your way, and again, I appreciate everybody's time.
I'll be on the shows, Big man. You educating me back, man. You bringing me back to the account side, man. You know that was one of the things that I needed with you. So.
Definitely, bro. Definitely, man. Hey, man, it's all love over here, man. Like I say, man, you guys keep doing what you're doing. I ain't going nowhere.
Yeah, I'll be on there, man. Let's get it back going, man. Let's build this foundation, man, because it's all about us, man. You know that.
Roger that.
So,
Roger that. Yeah. I'm with that. So with that being said,
I appreciate you bringing me on there, man, and I'll be talking to y'all, you know, regularly, man.
All right. Shoot, that'll work then. With that being said, look, I appreciate everybody's time and energy. Feel free to reach us out. We're going to be at the office till about 8 p.m. With that, I'm going to say peace and love, family. Peace and love.
All right. Peace out. Peace.